Ladies and gentlemen, good day and welcome to the Shaily Engineering Plastics Limited Q2 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Sanghvi, Managing Director, Shaily Engineering Plastics Limited. Thank you, and over to you, sir.
Thank you very much. Good evening and a very warm welcome to all the participants to the post-results earnings call of Shaily Engineering Plastics Limited. I have with me Sanjay Shah, our Chief Strategy Officer and now also our Chief Financial Officer, and SG&A, our Investor Relations Advisors. I hope you've had a look at our investor presentation that is uploaded on our website and the stock exchange. Let me give some highlights on the operational and the business performance for the quarter. Despite a challenging global environment, we delivered a top line of 158 crores, and we've improved our gross margins and EBITDA margins, which stand at 41.1% and 17.16% respectively. You're all aware that we have spent significant time in developing drug delivery platforms based on our own IP, and have also made significant capital investments in creating new facilities for scale-up. These efforts are finally yielding results, and we're now seeing the start of commercialization of some of our platforms. I'm happy to announce that we've received our first commercial, which is post-EB batches purchase orders from a few customers for some of our platforms. I would only reiterate that in this sector, our business scope is very extensive, and we are committed to continuous growth in the coming months and years. In addition to commercialization of our own products, we have also been awarded a new applicator project for which we will start supplies in July 2024, where the total value of the additional business is 35 crores per annum. On the home furnishings front, we have been awarded business for new products whose total value stands at 50 crores per annum, for which supplies will start in Q2 of FY25. We are strengthening our relationship with customers. We are also working with the home furnishings major on scale-up of our steel furnishings business and have received business confirmations for additional volumes that will see improved utilization not only in the current year but also in the next. In the automotive and engineering segment, we have added 3 new products, and the total business value stands at 3.5 to 5 crores per annum. We're delighted to announce that we have been awarded a new order of supply of 6 components in the engineering segment by one of our oldest customers, ASCO Valves. That is all from my side. I shall now hand over the call to Sanjay Shah to give you the operating and financial highlights. Thank you very much.
Thank you, Amit. Good evening, everyone. I shall share with you the highlights of our operational and financial performance of Q2 and H1 FY24, following which we will be happy to respond to your queries. During the quarter, we processed 5,673 tons of polymers as against 5,145 tons in Q1 FY23. For the half year ended, we processed 11,495 tons of polymers as against 11,905 tons in H1 FY23. Machine utilization rate was around 40% in Q2 FY24 and 41.5% in H1 FY24. Exports during H1 FY24 stood at 74.5% of total revenue. Now I shall brief you on standalone results highlights for Q2 FY24. Revenue stood at 155.7 crores during Q2 FY24 as compared to 160 crores during Q2 FY23. EBITDA stood at 25.5 crores during Q2 FY24 as compared to 25.1 crores during Q2 FY23. EBITDA margin stood at 16.4% for Q2 FY24, an increase of 70 basis points over Q2 last year. PAT stood at 9.9 crores during Q2 FY24 as compared to 9.4 crores during Q2 FY23. PAT margin stood at 6.3%, an increase of 40 basis points over Q2 last year. Cash PAT for Q2 FY24 was reported at 17.9 crores as compared to 17.1 crores during Q2 FY23. Now coming to H1 FY24 highlights. Revenue stood at 308.5 crores in H1 FY24 as compared to 332 crores during H1 FY23. EBITDA stood at 40.2 crores in H1 FY24 as compared to 46.8 crores during H1 FY23, growth of 5%. EBITDA margin stood at 16%, an increase of 190 BPS over H1 last year. PAT stood at 18.5 crores in H1 FY24 as compared to 16.8 crores during H1 FY23, a growth of 10%. PAT margin stood at 6%, an increase of 90 BPS over H1 last year. Cash PAT for H1 FY24 was reported at 34.7 crores as compared to 32.2 crores during H1 FY23. Our ROCE and ROE stood at 14 and 9.3% respectively as on 30th September 2023. This growth in business is being achieved with disciplined use of capital. Our debt to equity stands at 0.5x and our long-term debt to equity stands at 0.15x. Now I shall brief you on the consolidated result highlights. Revenue stood at 157.6 crores during Q2 FY24 as compared to 161.3 crores during Q2 FY23. EBITDA stood at 26.6 crores during Q2 FY24 as compared to 25.9 crores during Q2 FY23. EBITDA margin stood at 16.9% for Q2 FY24, an increase of 80 BPS over Q2 last year. PAT stood at 10.8 crores during Q2 FY24 as compared to 10.1 crores during Q2 FY23. PAT margin stood at 6.9%, an increase of 70 BPS over Q2 last year. Cash PAT for Q2 FY24 was reported at 18.9 crores as compared to 17.7 crores during Q2 FY23. Now coming to H1 FY24 consolidated highlights. Revenue stood at 314.9 crores in H1 FY24 as compared to 336.3 crores during H1 FY23. EBITDA stood at 54.2 crores in H1 FY24 as compared to 50.2 crores during H1 FY23, a growth of 8%. EBITDA margin stood at 17.2%, an increase of 230 BPS over H1 last year. PAT stood at 22.4 crores in H1 FY24 as compared to 19.6 crores during H1 FY23, a growth of 20%. PAT margin stood at 7.4%, an increase of 160 BPS over H1 last year. Cash PAT for H1 FY24 was reported at 39.7 crores as compared to 31.1 crores during H1 FY23. This is all from our side. Now we can open the floor for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and 1. The first question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good evening, sir. It was good to hear about the possible commercialization starting for our device business. So just on that part first, so we were waiting for, I think, US FDA clearance from one of our clients. So does it mean that is now completed and this will result in commercialization, or this is some other product or project we are talking about?
This is another pen, Aman. Again, it's not that FDA clearance has come in. They are anticipating FDA clearance to come in, but are preparing for commercial orders.
Okay, so this is apart from that. This is a new
Yes.
Commercialization. That's it.
Yeah.
Sure. My next question is basically in the annual report we have talked about.
Aman, we are losing your voice.
Sorry to interrupt, Aman. Can you speak a bit louder? We are not able to hear you.
Yeah. Is it better now?
Yeah.
So slightly better.
Sure.
Can you switch to handset mode?
Hello?
Yes, sir. Please proceed.
Yes. Yeah, sir. My next question was, we had talked about our targets to reach sell around 15 million pens by the end of this year. So, are we on track to do that? And will the bulk of the sales happen in H2 or already in H1 we have had majority of that target sales?
No, we have not had majority of the target in H1. So quarter 3 and quarter 4 we'll see bulk of the sales, but we will likely not get to 15 million. There's going to be a shortfall, not a very significant one, but there will be a shortfall.
Sure. And any kind of targets we have for the next year?
We'll assess the situation on sales in quarter 3 and quarter 4 and then give an update during the beginning of next year.
Sure, sir.
Certainly growth, but we don't know how much at this point.
Sure, sir. And on the own IP pens, is it safe to assume that majority of this is currently insulin linked only rather than the new molecules?
Can you repeat that, Aman? We lost you again.
Yeah, sure, sir. I was saying in terms of own IP sales, own IP pen sales. So, is it right to assume that majority of this is insulin linked rather than we are entering a lot of new areas? So, is it safe to assume that as of today?
No, on our own IP products, it's not insulin linked. It is more, it's more GLP-1s and parathyroid hormones.
Sure. So that helps. Sir, we had recently, I believe, participated in CPHI conference. So if you can talk about how was the response, given now we have a very extensive range of platforms available to offer to our customers.
So the plan was to give a full CPHI update on the next call. You know, the CPHI happens in October. But just to put it very shortly, very briefly, we had a fantastic conference. I don't think I had an idle minute at the conference from day one till the last day. So very, very positive response, not only from generics, but also from some innovator companies.
Sure. And as of now, how many international customers do we have for this division?
We have 2 international customers at the moment.
Okay. And given the response, do you see this number growing substantially in the next 2-3 years?
I don't know. Yes. I mean, from a baseline of 2, it will grow substantially.
Sure, sir. Just final question from my side. I'll get back in the queue. The new orders which you have talked about, which will get executed mostly next year, these are in addition to the orders we had in Q1?
Yes.
Oh, these are totally new orders?
Yes. So the home furnishing order or the automotive engineering order or even the order on the
the healthcare space. All of these are new orders which have happened in the current quarter.
And the remaining, the Q1 which you had talked about, some of the orders is expected to execute in, I believe, Q4 onwards. That is still on track, or is there any
That is still on track. That is still on track.
Sure, sir. I'll get back in queue. I have more questions. Thank you.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Priyank Parekh from Abacus Asset Manager. Please go ahead.
Yeah, thanks for the opportunity. Sir, wanted to understand the sales mix that we have in current quarter vis-a-vis the March 2023 quarter, wherein we have seen substantial high EBITDA margin compared to the last 2 quarters. So just wanted to understand how sales mix has shifted.
So Priyank, in the March quarter, I think we also mentioned this on the call. While we do not give individual numbers, but we have said that we had fairly large revenue coming in from the healthcare or the device space, where we supplied exhibit batches to some customers, and there were 3 or 4 shipments which were made. All of them were bunched in Jan to March. So that's the reason we saw that bump up happening. What we are also seeing is when you look at last year to this year, you're seeing a slow improvement in the EBITDA margin, and which is what we expect to continue going forward.
Okay. So, as you mentioned that bulk of the sales of
Hello?
We
Give
lost
me a
him.
minute. Yes, sir. So the line for the current participant has dropped off. We'll move on to the next question. That is from the line of Nirali Gopani from Unix PMS. Please go ahead.
Hi, sir. Thank you for the opportunity. So, Sanjay, my first question is to you on the gross margin side. So, if I see the gross margin for this quarter compared to the last quarter, Q on Q, there is a good decline of 3%. So, if you can just share your thoughts on that.
So, Nirali, when you look at from quarter 1 to quarter 2, you would also see that revenue, when you look at standalone and consolidated, you will see revenues from our UK subsidiary have been a little lower as compared to quarter 1. So
Right.
there have been some lesser revenues on the pharma front, and that's the reason we are seeing reduction in the gross margin. It's more of a mixed thing than anything else.
Oh, okay. Perfect. Amit, you have been sounding very positive on the next 2 quarters of this financial year. So if you can highlight, how do you see the growth coming in for the next 2 quarters? Like, can we see a top line of somewhere about 175 to 200 crores coming in the next 2 quarters?
I think I'm very confident of bottom line growth. Top line growth, I'm not confident of 200 crores in the next 2 quarters. Top line growth will be there, but it won't be to that tune. I feel bottom line growth will be more substantial in the next 2 quarters.
Largely backed by a higher margin because of the healthcare segment.
That's right.
Perfect. And also, if I see the last 2 quarters, we have roughly announced new orders worth of 190-200 crores. So when we look at FY25, so in addition to this 200 crores, the base business should also grow substantially. And hence, FY25 should see exponential growth on revenue and margins. Is that understanding correct?
So we will see growth. I don't want to put in an adjective there in terms of exponential or not. Yeah, we will see growth on the top line as well as at the margin level. So yeah, we will see
current situation is that there's a lot of money in demand. While we've gotten new business, we don't know what will happen to the demand for the existing business, especially in the non-healthcare side of the business. So there'll certainly, like Sanjay said, there will certainly be growth, both top and bottom line. Whether it will be 200 crores, whether there will be something that gets eaten up in the current business, it's a little too early to tell at this point. But we will provide that update likely in quarter 4.
Oh, no, perfect. That's it from my side. Thank you.
Thank you, ma'am.
Thank you. The next question is from the line of Priyank Parekh from Abacus Asset Managers LLP. Please go ahead.
Yeah, thank you. Just wanted to understand the 49 crore of capex that we have done on the first half. So, for what this capex is done, and secondly, how is the capex outlook for the next half of this year?
So, Priyank, a large part of this capex is the continuing capex which we did in terms of expanding our pharma facility, our device manufacturing facility. So, capex is for that reason. We have completed a large part of this capex during H1 of FY24. There's some spillover which will happen in Q3, which will continue. So, from a major capex cycle, we would be completely over by Q3 of FY24.
Okay, got it. And for our toys business, are we having any update compared to the previous quarter where we was not seeing substantial business in toys segment?
I think we will still continue with the same view as we talked about in quarter 1.
Okay. And
we're not actively pursuing toys business at this point. We'll participate where there is value add, but otherwise we're not actively pursuing.
Okay. So over last 3-4 years, there has been substantial import substitution has been happening in India, especially in toys. So are we seeing any opportunity from that perspective?
Not quite for the...
We're not seeing a lot of opportunities there, especially because I do agree with you that there is some localization happening, but none of the local guys have volumes to basically look at making investments in tooling and everything.
Okay. And my last question was on our hunt for the CEO. So are we having any development on that side?
It is very unfortunate. We had finalized the CEO, and the person was to join in the next 2 weeks, but he has pulled out.
Okay.
So we're going to have to start the search again.
Okay. Yeah. Thank you. That's it from my side. Yeah.
Thank you, Priyank.
Yeah.
Thank you. The next question is on the line of Harshal Sethia from AUM Fund Advisors LLP. Please go ahead.
Hi, sir. Can you comment on the carbon steel business? What kind of utilizations are we at? Because in the last quarter you had mentioned about ramp up. And what kind of pipeline is there in the same business?
So, Harshal, we have seen improvement at the utilization level in that plant. And we continue to work with the customers to basically see how we can improve utilization levels going forward. So if we were to compare Q2 of last year to Q2 of this year, we have seen substantial improvement in the utilization levels as well as on the top line. Even if we were to compare Q1 to Q2, we have seen improvement.
Okay. So, because in the previous quarter we had also mentioned that would lead to a better margin improvement. So due to operating leverage, kicking in. So do we see any kind of, margin improvement in the same, or if you can guide, say, by 100 bits or 150 bits or whatever?
So Harshal, if you were to look at Q1 and Q2 of last year and then compare it with Q1 and Q2 of this year, you have seen margin improvements happening in Q1, Q2, or even H1 over last year. So part of that margin increase is, a large part of the margin increase is coming in from the healthcare, but part of it is also coming in where we have been able to plug the leakages around carbon steel with improved utilization levels and everything. So that's a combination of these factors.
So are we at break-even in the carbon steel business?
We will not be able to talk about individual businesses, Harshal. So.
Okay.
Thank you. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Yeah, thank you for the opportunity and congratulations, Sanjay sir, on the appointment as CFO. We just had a couple of questions. We were looking at the volumes for the quarter. Could you please highlight which segments grew slower than expected, and if which segments grew as expectations? That would be my first question.
So home furnishings grew as what we expected. Home furnishings and FMCG grew as what we expected. Some of our shipments on our healthcare have moved from quarter 2 to quarter 3, but I think when we look at it from the whole year perspective, I don't think we will basically have an issue in terms of the shipments, because these are development projects where it does take some time.
Okay, got it. Sir, in the presentation, on the 6th slide, is written that we've got new order for supply of 6 components to ASCO, to the Oncology Society. If you could please just highlight, I still didn't understand what exactly this order was for.
So ASCO is an existing customer, basically manufacturing engineering components and everything. We have been supplying to ASCO for over 20 years now, 18 to 20 years. And this is a new order which we have got from them. So that's what we have talked about.
Okay. So could we quantify how much is the order value worth here, or that is not possible?
The volumes will therefore year on year, so that we have not quantified the volume.
Okay, got it. And so this final question before I get back in the queue, on the same page is written that we've decided for the split of shares, but I found no other release on exchanges. That is approved by the board, or that is still going to happen in the next meeting?
That has been approved by the board. That has also been approved by the shareholders. This was done post the last quarter board meeting. We had a separate meeting for that. So it has been approved by the board. Post it has been also approved by the shareholders in the AGM. We are going through the normal process. I think the shares should get basically from a 10 rupee share, we are taking it to 2 rupees. So it will be 5 shares for every 1 share held. And the whole process should be completed probably by end of November.
Perfect. Thank you so much. I'll get back in the queue. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Rajvi Shah from Bright Securities. Please go ahead.
Thank you for the opportunity. I had few questions. The first one is, sir, can you elaborate more on the order that we have received in the last quarter related to new applicator product in the pharma space?
What kind of elaboration are you looking for, Rajvi?
Like on the order perspective.
So Rajvi, I think the order value has been given. And what we have also said is we will be looking at commercializing this in Q2 of FY25. Rest of it, we would be bound by NDA in terms of what exact application and everything. But this is going to be a recurring order. So it will be a yearly order which will be recurring year on year.
Okay. The next question I had is, sir, on home furnishing segment, we have received new supplies for which segment? Also, any development on addition of customer in home furnishing? And which geography and what type of customers are we targeting for this segment?
We continue to work with our existing customer on the home furnishing segment. This order is from our existing customer, and we supply to this customer all across the globe wherever they have stores. So supplies are predominantly to Europe and US, but then we also supply to China, Asia, Middle East, and other places wherever they have stores.
Okay, that was helpful. Thank you.
Thank you very much.
Thank you. The next question is from the line of Richa Agarwal from Equity Market. Please go ahead.
Thank you for the opportunity, sir. So my question was...
sorry to interrupt, ma'am. We are unable to hear you clearly. No, ma'am.
Maybe I'll join back and...
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Nirali Gopani from Unique PMS. Please go ahead.
Thanks for the opportunity again. Sanjay, in this quarter, we have seen a good jump in other income. Any particular reason, and what does it include?
No, this is normal thing. So there's nothing one-off which is there.
But nothing related to the operations of the business, right? So ideally, if I eliminate other income and see the EBITDA.
Most of our other income would also be related to our business only.
Okay. Because if I eliminate the other income and see the EBITDA margin, there is a decline sequentially because of obviously the gross margin. So just wanted to understand, when you say that you see a significant jump in the EBITDA margin in the coming quarter and say next year, so from what level should we see this growth?
So just to answer your first question, the other income basically includes FX gain, so which is related to the business.
Okay.
Can you repeat your second question, Nirali?
No, so because if I eliminate other income, I was just seeing an EBITDA margin of 15% for the quarter. So I just wanted to understand, when we say a growth in EBITDA margin in the next 2 quarters or over FY25, from what level should we see this growth? From current growth of 17%, which is mentioned in the presentation?
Similarly, I think looking at Shaily's margins on a quarter-on-quarter basis would not be correct. What I would again reiterate is, when we look at margins, we look at the full year's margins which we achieved for quarter FY23. And
okay,
based on that, we are looking at growth in FY24 and FY25 going forward.
Perfect. That's clear. Thank you.
Yeah.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
So on the healthcare side, what kind of growth are we expecting in the second half?
Can you elaborate the question a little bit?
So at the start of, I think last quarter, you had talked about we are targeting very high growth for the full year. So are we on track of that? Is it lower than our expectation? Is it much higher than our expectation? If you can talk about that part.
We are on track to achieve that growth. Again, like I said, the 15 million pens is going to be a little bit less than that. So whatever drop that entails will be the only drop. Otherwise, we're on track to achieve that.
So that 50-60% kind of growth on healthcare side still stands?
Yes.
Sure, sir. So, sir, there's lot of the Indian generic players are facing some or the other issue related to US FDA audits recently. So, do you think this can have an impact on our plans as well?
Yeah, I mean, they can certainly have an impact on our plans, but all the ones we're looking at commercializing in or have started will start shipment of commercial orders. We have not seen those customers face an issue with the FDA. So there could be a potential longer-term impact, but nothing in the next 24 months that I can see today.
Sure, sir. In terms of number of projects addition, and by projects I mean say one customer, one platform, what kind of addition do you think will happen for this year and next year?
I mean, we're having active discussions with probably a dozen or more customers on various molecules and devices. I would assume that at least 60% we should be able to convert.
Aman, just to add to what Amit said, is I think every quarter we intimate you guys in terms of what is happening. So that's what we would do.
Sure, sir. And just final thing on this part, in the presentations, in terms of the platforms we have shown, I could not see the Neo platform. We have shown the other 5. Neither I could see the injector, the Mira platform, which is available on the website. So, any reasons for not including those?
So Neo, we are not showing it on the for some specific reasons.
The Neo platform will be updated on our presentations. We've already created our new healthcare presentation. You will probably see it in the next quarter.
Sure. These are the questions. Thank you.
Thank you. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Yeah, thank you for the follow-up opportunity. Sir, on the healthcare side, I wanted to understand the kind of prospects that differ when we sign with an innovator and a generic player. If you could just throw some light, what kind of opportunities would differ, and if we are in talks with any innovator right now in advanced stages.
We are in talks with an innovator on a novel molecule. I would probably not say that it's a very advanced stage. It's somewhere it's not an initial stage conversation, I think, but somewhere in between. So we're going through the evaluation process of our devices that are suitable for their molecule and primary container. And once that is complete, we will undertake, the agreement discussions. So that will be a new one for us, where we have a new chemical entity that we hopefully onboard. And with generics, we understand the markets a lot better because we know what is coming to an expiry, what is going to have an NCE-1 filing deadline, and our development is largely based on that. Some of our development also happens for innovators, but largely all the platforms that we have been able to commercialize or get to design verification are based on the deadlines that we see with the generic industry.
Right. So the innovator, if we sign any innovator, I'm just not putting up a question that we are going to, but the opportunities would be significantly different from what we have with generic players, or would it be in the same range? I mean, in terms of volumes that we may do. Just wanted to understand that.
See, with a generic player, you know the volume because you know what the innovator is doing and how much of a market share generics can take up. With an innovator, with a new chemical entity, you're not going to know what the volumes will be. They're essentially projections, right? So there's certainly a very high upside if the drug does well, but there's also a downside if the drug doesn't do well. So, with the generic business, there is more clarity in terms of what your future will look like.
Got it. And my final question, sir, on the FMCG side that we've mentioned, there's a new packaging development. Is it a product-based development or is it some client-based? If you could just explain what exactly is the development there?
So it will be a client-based development.
Okay, yeah. Thank you. You'll be sharing more details in the next quarter, right? Once it is in progress?
Yeah. So this order has already been confirmed. So we are doing the development now, and we would start supplies between 4 to 6 months.
Okay, perfect. All the best, sir. Thank you.
Thank you.
Thank you. The next question is on the line of Richa from Equity Master. Please go ahead.
Thank you for the opportunity. So my question was related to the CapEx that you were suggesting, a part of it will be more or less done by third quarter. So just wanted to understand, for whatever growth in pharma we are expecting 2x to 3x, will this CapEx be enough, the gross stock would be enough to cater to that kind of growth? And also, currently the turnover is 0.9. What kind of turnover could you expect, based on the product mix that you envisage 2 to 3 years from now on the current gross block?
So, Richa, what we have said is a large part of our pharma CapEx is done. We have created space for a total of additional 36 molding machines, out of which 12 molding machines have been put in. We will need to add another 12 plus 12, 24 machines, but they will be added gradually as the ramp-up happens and once the utilization levels within the existing pharma facility improve.
And what kind of utilization turnover we are looking at, once these capacities get settled and optimally utilized?
Again, I think giving individual numbers would basically be difficult, but if you were to look... Sorry, I lost you. I can't hear you.
Overall current gross block or gross
block.
Yeah,
so that's what I was coming to. So on an overall gross block, what we have said is somewhere between 2.25 to 2.5 of our fixed asset investment is the turnover which we would be able to reach.
Okay, thank you and all that.
Thank you.
Thank you. The next question is from the line of Bhavin Rupani from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Just wanted to understand how should one look at the margins and the capex requirement for the new orders that we have announced in Q1 and Q2?
The new orders which we announced in Q1 and Q2, we would be basically utilizing our existing infrastructure which we have, and we are basically adding in our healthcare facility, so that will take care of these orders.
So, sir, you are saying that no additional capex is required?
There will be some marginal capex, but nothing substantial.
Okay. And, sir, how should one look at the margins as compared to the company level margins, existing company level margins?
Again, every business will have different margins, so it'll be difficult for me to quote on. But as said, on an overall basis, we expect going forward margins to improve as the top line improves.
All right. And sir, just one clarification. Is it correct that we are looking at margin expansion in FY24 versus FY23? Is my understanding correct?
If you look at H1 numbers and compare it with H1 numbers last year, you have seen margin expansion at the EBITDA level and at the PAT level. We hope we continue that for the end of the balance part of the year also.
All right. Thank you so much for the answer, sir. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star in one. If there are no further questions, I now hand the conference over to the management for the closing comments.
Thank you everyone for joining the call. We hope that we've been able to answer your questions adequately. For any further information, I request you to get in touch with SGA, our investor relation advisors. Thank you and have a great evening.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Shaily Engineering Plastics Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines.